It has been an absolutely incredible Monday for the crypto markets. Bitcoin is up over 6% from the lows, and we've got news left, right, and center, which is affecting the markets right now. Let's jump straight into it and have a little update because look at this. Bitcoin currently trading at a price of $106,144 here on the Coinbase spot chart. You can see we are up from the dead lows that we put in over the last couple of days, 7.5%. And that is a pretty stunning gain, particularly considering where sentiment was just a day ago, just 2 days ago, 3 days ago, etc. You get the picture. We were right in the gutter in terms of market sentiment. Quick look at liquidations. I spoke about this in my earlier video today. We know that over $260 million worth of short liquidations went through in the last 24 hours. This has just ticked over, okay, $258 million worth. But you get the picture. It's the same story, right? Everyone who was positioned short in the market at prices pretty close to where we were got absolutely wrecked on that 7% move to the upside. What caused this? A couple of different things. First of all, we've got that which we've already spoken about. This is Trump's $2,000 stimulus check, his tariff dividend, as he's calling it. We don't yet know whether or not he's going to be able to do this. We don't know if this is even possible, whether or not this will be approved. We don't know any of the details about when it's going to be, who it's going to go to so far. Correct me if I'm wrong, please, but all we know is that this is going to be paid to US taxpayers resulting from the 2025 tariff collections, excluding very wealthy people, as he said. But like I've said, we don't know if this is true or not yet. Markets are efficient. It's very hard to trade news events like this because you just can't get in front of them. But basically why this would be bullish would be because when Americans are given free money, right? We've seen this happen before during the COVID lockdowns. When Americans are given free money, they go out and they spend it on risk assets. There's data to prove that US citizens literally did exactly that last time the economy was stimulated in this way. But this is stimulus not coming from the Fed. It's not coming from monetary policy. It's coming from the government, or allegedly it might be coming from the government. Okay, he announced this on Truth Social. We've also got, perhaps even more interestingly, a potential end in sight to the government shutdown. So reported here on USA Today, is the federal government shutdown over? Here's what still needs to happen. While the Senate has voted repeatedly during the impasse on whether or not to reopen the government, the House has been out of session and lawmakers must return to the Capitol to vote. The federal government is on track to reopen after the longest shutdown in US history, but final votes are still needed in the Senate and the House to end the 41-day impasse. The Senate voted 60-40 late on November the 9th to advance legislation to end the shutdown. 8 Democratic senators relented on long-held demands over healthcare policy and joined B2 Republicans to end the filibuster blocking the measure. So, there's light at the end of the tunnel, but we're not out of the woods yet. Of course, why is the government shutdown bad for markets? Because it is uncertainty. It means that there is a lack of data being fed to the Fed. So the Fed is basically making monetary policy decisions in the dark with less access to data that they need in order to make these decisions. It is bad generally for markets as well because it is just general uncertainty, the longest government shutdown in history. But we might be seeing an end to that. Developments on that tomorrow, I'm sure. Currently, the chances of another 25 basis point rate cut at the next Fed meet are up a little bit on yesterday, I believe, to 64.6%. Markets like rate cuts because it means that investors are incentivized to take their money out of yield-bearing assets and put that money into risk assets, such as stocks, equities, and crypto as well. We also know that the Fed is about to, in December, stop their quantitative tightening program. And generally, when quantitative tightening ends, after a period, we go into quantitative easing. Again, that means essentially printing money and more liquidity coming to the markets so that that liquidity can eventually flow into risk assets. So here we go. Government shutdown, almost over. Trump stimulating the economy himself, apparently, with the proceeds from tariffs at $2,000 per person. I want to just quickly contrast this, right, with headlines and sensationalism and what that means for the market. So look at this. JP Morgan reveals huge Bitcoin bet as it predicts a $3.5 trillion price boom. This is on Forbes. This is basically talking about JP Morgan revealing renewed interest from their clients in Bitcoin, right? Essentially clients that want to buy the dip. Very bullish headline. And then if we look on the other side of the coin, crypto treasury firms reel as market slump erodes billions in holdings. News like this, right? News moves markets. If you get enough headlines like this about treasury firms selling, that can move markets. Now, there's nothing false about this, right? We do know that last week, the first Bitcoin treasury firm actually sold some Bitcoin. As I spoke about at the time, there has to be a first time for anything, right? That is factual information. But my point here is, it would be very, very easy for big players who want to accumulate more Bitcoin, particularly at lower prices, right? Perhaps some of JP Morgan's clients to, let's say, promote articles like this, news like this, rhetoric like this, in order to keep prices suppressed so that they can accumulate more Bitcoin. Just something to think about. And just remember that every time we move in one direction for a couple of candles worth, right, depending on the time frame, let's say we move up for a couple of days, a load of retail money decides to long on leverage, and we know that that money increases, that retail leverage increases the liquidation risk on the market, which makes the market very fragile. It makes it very easy for big players to push prices around, because we know that if prices come down a little bit, those positions are going to become liquidated and prices are going to further extend to the downside. So just be aware of big, bold headlines such as those that we're seeing at the moment, okay? And I would even add to that Trump announcing his plans for a $2,000 tariff dividend. He announced this on Truth Social and we're up 7%. I think that's about enough for right now. That's all I've got anyway. Thank you so much for watching. As always, nothing I say should be considered financial advice, purely my opinion, shared just for entertainment purposes. Thank you so much for watching. Plenty more to come.